One of Ripple's most ambitious goals at the moment, one that many people may not yet realize, is its pursuit of operating as a fully recognized bank. In this video, we're going to examine a recent development that significantly strengthens the probability of Ripple transitioning into a banking institution, and why this matters so much for the company's future direction. Near the end, I'll also address a topic I've never publicly discussed on this channel: the XRP community riddles. Some people write them off as meaningless, while others consider them profound indicators. I'll share where I stand on this, so make sure you stay with me until the conclusion. As always, thank you for liking these videos and subscribing. It genuinely supports the channel more than you realize. Now, let's get into the details. I want to begin by highlighting a development that I believe is not only fascinating but absolutely vital to Ripple's long-term strategy, and one I initially viewed with skepticism. For quite some time, I have pointed out how promising it was to see leaders at the SEC who weren't just supportive of Bitcoin, but showed openness to digital assets as a whole. The same trend appeared at the CFTC, where the chairman demonstrated strong pro-crypto attitudes. However, the role that has flown under the radar is the comptroller of the currency, the key banking regulator. Ripple, along with a few other crypto firms, was among the earliest to apply for a national banking charter through this office. Recently, the comptroller's office released a statement that strongly benefits companies like Ripple. The incoming head publicly declared that cryptocurrency firms seeking federal charters should be evaluated on equal footing with traditional banks. Considering Ripple's extensive qualifications, this significantly increases the likelihood that it will secure federal bank status in the near future. Many people naturally question why Ripple would want to be a bank when so many of its clients are already banks. Some assume Ripple might be attempting to compete with or replace them, but that's not the case. Traditional financial systems and emerging digital infrastructure operate differently. In the legacy environment, you could develop tools for banks without being one. In the digital asset ecosystem, however, interoperability increasingly requires both fiat and crypto banking to work in tandem. Ripple is building what amounts to a banking-as-a-service platform, but without a bank charter, Ripple runs into constraints, especially if it wants to issue a stablecoin or operate in full compliance. With federal banking status, Ripple would be able to provide institutions with a regulated, standardized environment for digital transactions, making it vastly easier for banks to adopt crypto-based solutions without compromising regulatory obligations. This positions Ripple not merely as a vendor, but as a foundational platform capable of operating alongside major financial institutions at the same regulatory tier. This shift is monumental because it simplifies onboarding for banks, who are, above all, driven by compliance concerns. Instead of entering a poorly regulated digital environment, they'd be working with a chartered entity overseen by the comptroller. Access to such a platform could realistically transform Ripple from a background service provider into a core component of financial infrastructure. A federal charter could even grant Ripple a Federal Reserve master account, dramatically improving liquidity access and enabling it to develop products that align with institutional standards. Now, shifting gears to a topic many subscribers frequently ask about, the so-called riddles in the XRP community. Before I explain my position, I want to acknowledge 2 points. First, I think it's fairly evident that whoever crafted these riddles has been close to Ripple or XRP for a long period. Second, I do not believe they are prophetic in nature or that they can predict specific future events. That interpretation is unrealistic. However, could they be crafted by someone familiar with internal developments who uses them to offer subtle encouragement or indirect affirmation to the community? I think that possibility is far more rational. Ripple's pursuit of a national banking charter becoming increasingly realistic is a major development that could redefine its role in the financial sector. The recent stance taken by the comptroller of the currency, stating that cryptocurrency firms should receive equal treatment to traditional banks when applying for federal charters, marks a substantial shift in regulatory tone. For years, digital asset companies have faced ambiguity and inconsistent regulatory expectations, which has limited their ability to fully integrate into core financial infrastructure. With this new perspective emerging from the top of the U.S. banking regulatory framework, the environment is becoming more favorable for a company like Ripple, which has spent over a decade building credibility, regulatory relationships, and enterprise technology aimed at modernizing settlement and cross-border systems. This is not simply a symbolic win. It directly affects Ripple's pathway to operating on the same regulatory tier as the institutions it serves. Ripple's qualifications make it stand out compared to many other crypto firms that might seek similar permissions. Having long partnered with financial institutions globally and actively working to enhance compliance and transparency, Ripple has already positioned itself closer to the traditional financial system than much of the cryptocurrency industry. This background increases the plausibility of seeing Ripple secure this charter in the foreseeable future, especially now that the regulatory gatekeeper is publicly acknowledging that digital asset firms are legitimate contenders for federal charters. The significance here isn't just the approval itself, but the opportunities it unlocks. With a charter, Ripple could offer services like custodial accounts, settlement functions, and stablecoin operations without the legal and regulatory constraints that currently limit non-bank crypto entities. For Ripple, transitioning from a technology provider to a federally chartered bank is about aligning with the compliance expectations of institutional partners. Banks engage cautiously with new systems, especially those involving digital assets, due to regulatory risk. A federal charter eliminates much of that concern, providing Ripple the credibility and authority needed to integrate into banking operations seamlessly. This credibility could accelerate adoption of Ripple's platform for settlement and liquidity solutions, strengthening its value proposition and embedding it deeper into the financial ecosystem. The shift also signals a maturing regulatory landscape that sees digital asset firms not as fringe entities, but as potential participants in the broader banking system. When combined with Ripple's existing relationships and technological grounding, the new regulatory attitude significantly increases the likelihood that Ripple will successfully become a bank, positioning it at the forefront of digital asset-driven transformation in global finance. Ripple's ambition to become a bank is not about competing with or displacing traditional institutions. Rather, it is a deliberate strategy to bridge the gap between the established financial system and the rapidly evolving digital asset ecosystem. In a legacy environment, a technology provider could create solutions that banks could adopt without needing to hold a banking license. That dynamic shifts dramatically when dealing with cryptocurrency and tokenized assets, where compliance, custody, liquidity management, and issuance often require the same regulatory status that banks possess. Without a bank charter, Ripple is constrained in how far it can extend its capabilities, especially when it comes to offering a fully integrated platform for digital settlements, potential stablecoin products, and cross-asset liquidity solutions. This limitation makes its push for regulated status not merely advantageous, but essential for scaling its role in the next generation of financial infrastructure. Banks operate in a world where every product, service, and integration must adhere to strict regulatory standards. When institutions evaluate a partner for digital settlement or liquidity solutions, the first filter they apply is regulatory risk. If a company cannot match their compliance framework, the partnership cannot progress regardless of the technology's potential benefit. By obtaining a federal charter, Ripple eliminates that friction and positions itself as a compliant and trusted entity capable of handling fiat and digital transactions under the same supervisory structure that governs banks. This credibility is especially important for services like custody and stablecoin issuance, which involve holding value for clients and therefore require a high level of regulatory oversight. Additionally, a bank charter enables Ripple to serve as a platform rather than just a tool. Instead of acting as a supplemental service running behind the scenes, Ripple could become the regulated infrastructure through which banks enter the digital asset space. Banking as a service becomes significantly more feasible when Ripple itself has the legal authority to hold deposits, manage liquidity, and operate within federal standards. It can integrate traditional accounts with digital asset rails, creating a seamless environment where settlement, conversion, and asset management happen under one compliant umbrella. This dual capability minimizes the complexity and risk for banks exploring crypto-enabled services and accelerates their adoption since they no longer have to build or navigate unfamiliar regulatory terrain. Ultimately, Ripple's goal to become a bank is a pragmatic approach to achieving long-term relevance. It ensures that its technology aligns with institutional expectations, opens the door for broader adoption, and enables it to play a foundational role in a financial system where digital assets are no longer peripheral but essential.